We've been wondering just how much of a trade deal between the U.S. and China is priced into the markets. What does today's action tell us?
Well, I think it tells us there's still some more room to go, that it's not fully priced in, but I think we'd be wrong to say, that a lot of the move we've already seen so far this year hasn't been about trade. I mean, we noticed that the S&P really did seem to be moving with the trade narrative. So, I think there's still some more to do, but a lot of it's in.
Torsten, what about earnings? I mean, what does this mean for the earnings picture if we do get the trade deal?
It is a cloud that's getting very, very slowly moving away from where we've been for a while. But at the end of the day, the key word really here is enforcement. Is this just gone over the next few weeks, or are we going to get back every month when China has to show up at the US door and say, did you do this, or didn't you do this, and did you deliver on all these promises? And how do you actually check if enforcement is there on intellectual property rights? How do you check if it's there also on everything you're doing in terms of what you're promising to buy? So there's a lot of things that are suggesting that this is not just going away over the next few weeks.
Meaning what? That even if there is a deal, we could still be faced with the prospect of tariffs coming back because the Chinese are not complying?
Absolutely, because the risk is that what does it mean to comply, and what does it mean that the US is satisfied with what the Chinese have to deliver? That just will continue to be an issue, that we now suddenly have this option open of anytime new tariffs can come, or new negotiations can come, or point to something that basically wasn't delivered upon. Well, of course, we do expect that we will get something on the deal that will be helpful, but this still is a whole new agenda that just is going to be an issue for potentially quite some time.
I mean, what Torsten is saying, Lori, is that the details do matter, that Wall Street doesn't need just a deal.
Well, I think there needs to be enough of a deal in place so that businesses have certainty upon which to plan. I mean, I think one of the things I noticed through this reporting season, which is mercifully winding down now, is we didn't see a lot of corporate overreaction to the uncertainty that's in place. There was a sentiment hit, but I didn't get the impression that companies were really changing a lot of things massively. So, I think we don't have to have complete certainty, but we need a decent amount of it.
Lori, we saw the president walk away from the North Korean talks with nothing. As slight as it may be, what would the market's downside be if, in fact, things did not proceed to a deal with China?
In terms of the trade deal itself?
Yes.
I think it would be a pretty big blow to the market, to be honest. I wouldn't necessarily expect to surpass the December 24th lows in any kind of major way, but I think you could look for a healthy move lower.
Are you saying, does the walk away from North Korea have any implications for the China trade deal? Does it make it more or less likely that he wants to do a deal with China?
Well,
it's hard to game this out.
I know, that's very difficult. I mean, that's essentially a political calculation. I mean, what's very important to what David is saying is that, remember, the trade deal has had a very significant impact on the global manufacturing cycle. So the auto industry globally is not doing particularly well. So the longer this uncertainty persists, the more I get worried about the global economic forecast will have to be revised.
Well,
down.
let's talk about actually where the focus will be. Let's assume we do get a deal of some kind by the end of this month. Where is the market then going to start to focus?
Well, the lift is that the uncertainty is going away. But the question that I'm getting from clients is, what's on the other side of a trade deal? What are the things that we're going to talk about in the future once we have the trade deal behind us? Well, will we talk about the trade deal still in terms of enforcement and implications? Or will we begin to talk about some of the underlying fundamentals, what's going on both with the auto industry globally? Will these things start turning around? Because the problem is that the market has rebounded, but fundamentals and expectations to earnings and expectations to growth hasn't really rebounded that much. So therefore now we're beginning, if you saw ISM last week, still is trending lower. We're beginning to see some signs of some of the economic indicators bottoming out, but we're a little bit worried that sentiment is back to hooray, hooray, but the economic indicators haven't really turned around as quickly.
I mean, do you have a thought on that? I guess another way to phrase it is, if the market's discounting a Fed pause and the market's discounting a trade deal, what's next to drive the market?
Well, I would say we don't. I do think there's a legitimate concern about what's the next part of the narrative, and I think we're in a little bit of a story vacuum now that we've gotten past earnings, we've got the trade deal, we've got the dovish Fed. So I think investors are kind of looking around saying, hey, what are we going to talk about now? That's legit. But the idea that we've sort of returned to this euphoric sensation in the market, I just flat out don't see it. Whether you're looking at retail investor sentiment on AAII, we've rebounded from extreme oversold conditions, but we're neutral. We're nowhere near last year's peaks. If you look at the CFTC data on U.S. equity futures positioning, that's also rebounded sharply from financial crisis lows. But again, we're sort of meandering in no man's land. We're nowhere near the peaks that we saw last January or September.
And what about the overall multiple on the market? Are you comfortable with where we are right now?
Yeah, I mean, I think that with the Fed moving to the sideline, the ability for the multiple to expand again is in place. Now, we're at 2,900 and 171 on our numbers for the S&P. That would take you to about a 17 times trailing PE average. That's average. I mean, that's nothing heroic.
Did you guys hear President Trump speaking at CPAC? over the weekend? Mention the Fed, mention the Fed chair, again, mention the US dollar. Listen.
We have a gentleman that likes raising interest rates in the Fed. We have a gentleman that loves quantitative tightening in the Fed. We have a gentleman that likes a very strong dollar in the Fed. I want a strong dollar, but I want a dollar that's going to be great for our country, not a dollar that's so strong that it is prohibitive for us to be dealing with other nations and taking their business.
Here we go again, Torsten. If this becomes a campaign strategy, a slogan for him that, you know, to use the Fed as a scapegoat for all things wrong with the economy, what is that going to mean for the markets?
Yeah, you wonder how the Jay Powell and the FOMC are thinking about this. It's just a really difficult situation. They would much rather just look at inflation, unemployment, look at the outlook more broadly, rather than being involved in any political speculation about why they're doing things and they're not doing things.
Particularly surprising, isn't it? Because Powell's now neutral. I mean, he's kind of did what the president was hoping he would.
And that's, of course, the problem here, that he has actually done exactly what, in some sense, Trump was asking for.
Yes,
and
but they're
might not
still
have been very
tightening.
pleasant. Absolutely, and QT, as Trump also talks about, of course, is a very important part of the policy also. And there is a significant debate about should the Fed stop running down the balance sheet now, later, when this year, and what is the magnitude. All these things are a very important part of fixed income debates, but just not particularly.
Final word, Lori. Is this going to move? Is this going to move bonds and the dollar if the president keeps talking about it, or is it just noise?
Well, I think the dollar's been, very difficult even for currency forecasters to figure out what's driving it lately. But I would just say on the dollar, it's been pretty flat. If you look, I mean, we've been sort of at the 96 slightly plus level since August. The dollar just sort of meanders from here. By the end of the year, it won't be strengthening year over year anymore. And then, this sort of argument, the stronger dollar is hurting profitability, that will actually start to recede.